infinite amounts of money, and if the country can do the same by selling its treasury bonds, then who does the US owe its money to? Well, here's our debt so far. That's a lot of money. And who is it owed to? And before we get into that though, I want to quickly mention taking back control of your own economic energy. And that's why this video is brought to you by Kraken. Kraken is a US-based cryptocurrency exchange founded in 2011 and is the official crypto exchange and partner of Williams F1 and Tottenham Hotspur. Now since 2011, Kraken has built a reputation on rock-solid security and transparent proof of reserves, so you know your assets are protected at every layer. Kraken's interface is designed to be easy for both beginners and advanced traders. They offer one of the biggest selections of cryptocurrencies, everything from Bitcoin and Ethereum to emerging altcoins. And if you want to step up your game, Kraken's advanced tools make charting, limit orders, and portfolio management super easy. If you're ready to explore crypto on a platform that puts security and simplicity first, sign up with Kraken today using the link in the description below. I may earn a small commission at no extra cost to you, which helps keep the channel running. And remember, the information provided in this video is for educational purposes only and does not constitute financial advice. Thanks to Kraken for sponsoring this segment of the video, and now let's get back to it. So here's the breakdown. At the end of last year, in 2024, the United States had over $36 trillion in gross federal debt, which is roughly 120% of something called the GDP, which means more than a full year's worth of all goods and services the US makes. We are now in debt. Now out of that 36 trillion though, about 80% of the debt was held by public investors, with the rest of the 20% recorded as intergovernmental debt. Of the 29 trillion held by the public, foreign investors in other countries owned about 8.5 trillion or 30%, including 1.8 trillion split between Japan and China. And that's why you've probably heard the rumor that China and Japan own the US and they could collapse the US by selling all of their treasury bonds and just dump them all on the market. But that would probably never happen because here's the catch. Selling that many treasury bonds would collapse bond prices, which would increase interest rates through the roof, and it would destroy the value of their holdings too. In other words, the biggest foreign owners of US debt have just as much of a reason to keep our borrowing costs as low as we do. The more US treasuries a country owns, the more their economy is tied to the fate of the US economy. So it's kind of ironic and counterintuitive, and no, foreign countries don't actually control the US. In reality, the single biggest holder of public debt is the Federal Reserve, with over $6 trillion on its balance sheet. Now that debt is owned by investors like state and local pension funds, banks, insurance companies. If you own treasuries or bonds, as people call them, you are part of that. And you own a part of America's future tax revenue, and you make money when the government pays interest. So if you're a bondholder, you partially own America. The problem is, at a certain point, investors don't want to lend money to the US because our debt is considered risky. Can the US sustain itself on this path forever? Most economists say no.
The US federal debt is on an unsustainable path. It's not at an unsustainable level, and no one really knows how much further we can go. You know, we're running very large deficits at full employment, and this is a situation that we very much need to address. Sooner or later we'll have to, and sooner is better than later.
And if you're gonna lend your money to someone that is considered very risky, that's on an unsustainable path, you would want a higher interest rate for giving them your money. That means the more money we print and the more treasury bonds we create, the US has to incentivize investors with higher and higher rates, and that will cost the country more and more in interest. It's the infinite feedback loop. That's one of the reasons why President Trump wants to lower interest rates so the US could refinance at a more reasonable level. Now, if companies and banks can print unlimited amounts of money and the US has so much debt, then couldn't we just change the system and vote the right people into power and just make it all better? Turns out, that's really hard to do. And nowhere is that becoming more clear than politics. In 2024, for example, 100 billionaire families spent a record $2.6 billion in federal races, about 1/6 of total spending. The top 50 individual donors gave out $2.5 billion, with Republican-leaning contributions outpacing Democrats about 2-1. If you remember, Elon Musk was actually a big part of that, and he donated hundreds of millions of dollars, mostly to President Trump's causes. But there's also Miriam Adelson, who gave out over $100 million in 2024, and she's one of the GOP's biggest donors. There's also Timothy Mellon, who gave out $197 million to elections, almost all to Republican-led super PACs. Add $1.9 billion in estimated dark money spending by nonprofits and shell groups that conceal their donors, and you get the idea. But it's also the same story on the Democrat side. George Soros' super PACs spent a ton of money. His Open Society foundations spent at least $140 million into organizations in 2021, on top of more than $170 million he contributed personally during the 2022 midterms. And in the 2024 cycle, the Soros family-funded groups like the Texas Organizing Project got $600 grand, and state Democratic parties in Wisconsin and Ohio got $250,000 each from Soros-affiliated entities. Now this rabbit hole goes so deep, but for the purpose of this video, the point here is that the system spends a huge amount of money to influence who runs for politics, how things are the way they are, and who the winners and losers ultimately get to be. But all this sort of brings me back to the original question of who controls and owns the country. And I think the answer is, it depends on what you value. Some people, for example, don't value money. They value political control. Some people value social control and the ability to say things that they want without a consequence. There's a lot of levels to this, and there's no one entity that controls all of it. So what do you value? For me, the thing I value most is my economic energy. Like this bill right here, it represents a small part of my energy. I converted my time into skills and my time and skills into this, right? It's another form of energy. And I can also convert it into something else, like food or shelter. But unfortunately, someone controls this form of energy already because they have a magic button that they can just press, which zaps this energy away from me. Now I can't actually see it vanishing, but I feel it when I go shopping. And I realize that the time I spent to get this buys me less of the things I want. And that's what rich people kind of figured out, the solution to that problem. And it's called a store of value. They figured out that if they can convert that form of energy into something else, like stocks, real estate, or art, they can keep more of their economic energy for themselves for longer. Now, some of the most efficient forms of energy they found are things like stocks, beachfront property, gold, and art. And that's why those assets have what's called a premium. A premium is to pay more than what something might be worth. But think about it. Why is there a premium? At the end of the day, a house is a house, a car is a car, a thing is a thing. There's no real reason from a utility perspective why one house should be worth the average and another worth millions and millions, except for its ability to hold and store value. That's the primary reason there's a premium. Rich people are happy to pay more for those things than they are intrinsically worth, because those things store their economic energy more efficiently. How special is that thing beyond its utility, and how desirable will it be to others in the future? That desirability is tied through the lens of economic energy. And that's the quadrillion-dollar question. Which one of them is the best for that? I promise you, I don't want this to be a Bitcoin pitch video, but I'm gonna leave you with this. It's a tweet I saw from Tad Smith, and it might open up your mind to an idea. In 2017, a famous Basquiat painting sold for $110.5 million. It was the most expensive Basquiat painting sold at the time. Bitcoin was worth about $2,000 a coin, which meant the buyer could have spent 55,000 Bitcoins to buy this painting. But fast forward to July 2025, and Bitcoin is now $117,000. That same $110 million painting would only need 941 Bitcoins. Now in dollar terms, that painting went up in value. It preserved its economic energy. Awesome. But if you measured it against a different economic energy, Bitcoin, then you'd actually realize the painting lost 98% of its value. Now the same is true of real estate. What was the average cost of a house a couple years ago? How many Bitcoins did it take to buy one? From 2016 to 2024, the average house went up over 50% relative to dollars. That's insane. It preserved economic energy. Awesome. But relative to Bitcoin, it lost 99%. In fact, from 2020 to to 2025, the average house again lost over 80% of its value. Bitcoin is draining all of the premium out of those assets, and it is sucking it up as more and more money realizes that this specific form of energy is superior for the purpose of protecting economic energy. And that's why every asset class will continue to depreciate when measured against it. And as more and more money understands those benefits, it will continue to tell that same story. What those benefits are, though, I'm going to leave it up to you to study. Bitcoin's not for everyone, and I get that, but if you value preserving the value of your time, then you might want to read into it. I hope you have a